the market starts to trade sideways. And what do you see happening here? You see that the market is trying to move down because that's where the momentum is. Look at this. 2 bars to the downside, 2 bars to the downside, 1 big bar to the downside. So the market is trying to push down, but now look at what's happening to the closes of the bars. Okay, the close of the bar was on the low, off of the low, off of the low. Look at this close, even higher. This close, even higher. So what is going on in the short term? The market is moving up. What is it telling you? Well, it's telling you that there's this pressure building. There's pressure building between this resistance level here and this support level here. Okay, it's not the prettiest triangle in the world, but that's not what I want to focus on, is the exact precise pattern. I want to focus on what is the market telling you. Because again, the insider code is what is the market telling you? The market is telling you here that, hey, we're trying to push the market down. The market's telling you here, we're trying to push the market down, but the buyers are coming in and pushing it back up. We're trying to push it down, the buyers are coming in, and look at this now, they can't even get it down here to these levels. It doesn't even see these levels anymore, or these levels anymore. So this is why it's important to look back at the hourly bar. Don't get so focused on this little crap here, this wiggling around with the market. Look at what the market is actually doing. Go back up to the 4-hour bar and look at what the market's doing. In fact, let me bring this 15-minute bar. Now, the 15-minute looks actually ridiculous here because look at how much time we have to go back. I mean, all of these bars are tied up. Let me see. Let's see, all the way back here. All these bars here are tied up in this one 4-hour candle. The rest of these bars here, 5, 6, 7, 8, all of these bars are tied up in this next candle. Right? So let's just look at what's going on in the marketplace. The market makes a low down here on a close, but look at what happened. They tried to push it lower. Could it hold? No. Remember, supply and demand. I mean, folks, if you get this stuff, if you understand supply and demand, and you understand that supply and demand rules the marketplace, all of this will make sense. You won't need to look at the squiggly lines. You won't need the MACDs and the stochastics of the world because you're looking at what's actually going on in the marketplace. No, there are no sellers down here. There aren't enough sellers down here to keep the market moving down. They try again. There aren't enough sellers. They try again, and the buyers finally come in and push the market back up. The sellers come back in, and look at this. They try and push the market down, but look at what they happened on a closing basis. It's actually a little bit higher. It's certainly higher than this low. But so on the spike, they could not push the market down and lower on the spike. On a close, they could not push the market down and lower. And remember, all of this activity in these 4-hour bars is happening right here in these 8 hours. Okay? So again, the 4-hour bar helps you to really focus on what's going on. And what's going on is they can't push the market down. There's support there. Okay. So we're coming into the 11:30 hour. We get our 3-bar reversal. Bang. The market starts moving up. Now look at the difference here. The market comes up and makes resistance. Comes up into resistance again, and what happens? Immediately turns around. So 15-minute bar comes up, then comes right back down. What happens on this time? Comes back up, comes back down. What happens over here? It pushes up, but look at these lows. They tried to push it down, and they couldn't. If the market can't keep going down, that means there are buyers present. Pure and simple. If the market is not going down, more buying orders are present, or more buying orders are coming into the market. Pure and simple.